flag. I'm going to bring in market watchers, David Nelson and Aaron Gibbs. Aaron, market internals, they were absolutely horrendous. I mean, almost every single day there were 3,000 losers to 1,000 winners on a NASDAQ. There were far more new 52-week lows and 52-week highs. The down volume was huge compared to the up volume. So we knew this was going to happen. Does it mean, though, we're on the cusp of a more meaningful sell-off?
I don't see it just yet. Because when you look at all the different parts of the market, right? The NASDAQ is clearly, very growth and very momentum. But when you look at value's actually been up for the past 2 days and it's doing quite well and so far still up for today. So unless I saw just across the board getting out of equities, I'd be more concerned. When you really look at it, it tends to be your higher risk equity group. So your high momentum, your smaller caps. I really see this as more of a risk-off trade, and it's it's a lower volume week. Obviously a lot of people are more focused on the upcoming Thanksgiving, so I just see this as maybe a pause and a week to be a little more less risky.
Yeah, I mean, to that point, David, the NASDAQ has had one heck of a year, and, so has the S&P. So it's okay, I guess, from time to time. But, this is the reason we do this show is that if something is brewing, we want to sort of be able to identify it, head it off at the pass. And again, last week I was shocked at the times we closed higher. But it masked tremendous damage. What do you need to see from this market to see that maybe this period is over? Like, what do we have to do is this a consolidation of profits? What's going on?
I think the markets are keying off a few things. They're seeing, higher oil prices. They're seeing higher rates. And in that kind of a market, i.e. long duration equity, which is, code for tech and growth, that's for sale. And to Aaron's point, the market, by and large, has actually been pretty strong. It's all you're seeing right now is rotation out of some of these names that, to be fair, are pretty expensive names. Other parts of the market are holding up just fine. So I think this is just really nothing more than a rotation at this point. And I think we're going to be challenged next year if rates move higher. We're going to have to talk about that.
In the meantime, we just heard President Biden speaking. He did shoot a shot across the bow of the oil industry, but also profits in general. David, when you start hearing when things go wrong in this country and they start blaming corporations and they start talking about their profits and higher taxes and confiscation, as a professional money manager, what do you do? What do you think about?
It's an insane argument, for myself. I have to focus on the fundamentals of the companies that I buy, but it does concern me. You made a great point, that they're attacking profits. And to Larry's point, it's the lifeblood of the economy. It's the lifeblood of industry. The oil market saw right through the release of the SPR today. You were exactly right. It was a Band-Aid at best. It will likely do nothing to keep inflation expectations from rising. And it seems politically motivated by an administration whose poll numbers are in free fall.
Right.
So we have to look beyond that.
So, Aaron, real quick, we're talking about value. It is moving higher. It's being led by financials. Do you stay the course there?
I think this one was probably going to be a little more short-lived. I think financials are really just following what we're seeing in interest rates. They're heading towards their 1 month high, and it looks like they may finally break that 1 month high for today. I'm not sure how long this is going to last, because I think we've got a good sense of where inflation is, and we know that the longer duration bonds the prices have been dropping. So I'm not entirely sure this is going to be a trend for the next 6 months. I think it might be a 1 to 2 week pause.
All right. David, Aaron, thank you both very much. Always